There are a number of areas where AI is helping to the banks. One of the area we will cover now today is the how AI is helping to the anti-money laundering. We showed you number of areas where the AI is helping to the bank, which is PFM, location intelligence, KYC and ID management, fraud detection, account inquiry, insurance claim, money transfer, robo chat, customer services, loan application, credit scoring, and loan quality. So today we are covering anti-money laundering. Anti-money laundering is a big area where a lot of frauds are happening in the area of money laundering or sanctioned countries violation or funding for terrorism. Now, the estimated amount of money laundered globally in 1 year is 2 to 5% of the global GDP, which is $2 trillion in the current US dollar. So it's a huge amount that currently every year the money laundering is happening through the banks. If I will go to the area that what are the areas of the money laundering or how the bank is doing this called anti-money laundering and monitoring the transaction and the customer. So there are two areas of it. One is more of a trust. Trust is all about that how we should know the customer when he is opening an account or starting a relationship with the bank. The second one is the customer due diligence, and that is all about how the customer overall and his company review on their documentation, the company documentation, the director's documentation, and full review of the customer when they are coming and start using the bank as a relationship. The other side of it is monitoring. So if first two will be good, definitely the monitoring will be better as well. Because if bank has done a very thorough KYC and a thorough CDD, that's mean that their customer is genuine, the person who is coming to open an account is genuine. So that is the first area to build the ground. And if the ground is good, the rest of the thing goes well. But in a real life, it doesn't happen that way because a bank is believe on what the documentation has been done and what the documentation has been submitted. They have a very less knowledge about the customer when they are coming to open an account with them. In a passage of time, definitely with his transactional behavior, his relationship with the bank will know and have some data to really understand the customer details. Now, second is very important, which is a more of a monitoring. So first is transaction monitoring. So whatever the transaction customer is doing, it goes into the system where the system will look into the various rules, and on the basis of rules, it gives the SAR report. Suspicious activity report is all about alerts against the transaction, and these alerts comes on the basis of the rules you have submitted, built into the system. Second is a payment screening. Whatever the payment is happening, it has to be screened. And when we are saying screening is different in a way that whether the customer, when doing a transaction, its payment comes under to the regulations or not. So that is another area where bank is monitoring. Third area is a customer screening. Customer screening is very important, like whether the person, company or the person is PAP. PAP means politically influenced people. It is blacklisted or not. His name is somewhere in the any of the list which is crucial. So there are a number of databases the banks are keeping, through that this customer screening is happening. And the last thing is a customer risk rating. So every bank does a customer risk rate. So whenever they find any of the transaction monitoring, and it might can be the false positive alert or false negative alert as well. But the first time when the alert generates and somebody review it, whether it is a genuine or not, although it can be genuine, they reduce the rating of the customer risk rating. And it is called a soft blockage, means that bank know that these kind of transactions are happening, but it is not to the alarming level. And when it goes to the alarming level and discussion starts with the review of again CDD, the customer has to be reviewed again, that what kind of this customer is or the company is, and is really the customer is genuine or not on the basis of that transaction. So this is a mechanism I'm trying to tell you before that I should go into the AI, that how AI is helping to the bank in anti-money laundering area. So what is the money laundering areas? I will not explain everyone because this is not a subject of money laundering or how banks do the money laundering and how banks set the rules. It is just telling you that what are the issues, because the real subject is how AI is being used in the bank now to do the monitoring of anti-money laundering. So first is spoofing and structuring, round tripping through cryptocurrency, trade-based, online gambling, resale assets, gift and free, unusual transaction patterns, large amount of cash and wire transfers, countries with the weak AML laws, high risk countries or product, and unexplained changes to the account or beneficiaries. Now, each of them or each of these areas, banks set the rules to monitor. And these rules now is fully automated. 20 years back, of course, it was a very much of a manual monitoring. Now it is a very much of a through a technology monitoring, and the technology where we set the rules of all these areas, and each case we are having a different set of rules. Now, rules can be developed on the basis of regulation, and rules can also be developed additionally with the number of cases happening to the bank. So banks learn in a passage of time how the customer is doing things wrong under the money laundering, and around those issues they build the further rules. So simple is that if you are tightening too much the rules, it's mean that so many alerts system will generate. Like SAR report will be very big. Now it will be at the end is a manual job for a SAR report, or the this alert has been generated. Somebody at the first level has to review whether this alert is a false alert or this is a really a genuine case. If it is a false alert, then it's mean that they have to not go in a review. But if it is a real alert, it go to the second level, another person who is a more expert and trained person who really reviews it and see what discrepancy has happened. So hundreds and hundreds of the rules the banks set into the system. Now, I'm showing you some of the how the this whole thing works in the sense when we are setting the rules. So one is a transaction monitoring rules. So transaction monitoring rules are on one side, then customer experience. Obviously, if you are going too much to the customer and asking a lot of things to the customer is not happy. And it might be there is a genuine answer of it. Like if somebody is doing some transaction and a bank system put this as an alert because this is a new transaction and the system feels that this has to be reviewed. When they go to the customer is having a genuine reason out of it. But reaching to the customer and continuously reaching to the customer experience impacts. The third thing is a bank managing risk. So if you are too lenient also in this first transaction monitoring level or rule setup, you lose the managing the risk of the bank. Now, another side, if you are very stringent rules and the policy you are putting into the transaction monitoring, the alerts will be very high and bank has to pay a lot of cost to manage those. Means that some analyst who is doing this alert analysis and some people who are calling to the customer, there is a huge cost to the bank. So there is a relationship or directly relationship with the all these four. How it works? If you relaxed kind of your transaction monitoring rules, customer experience goes up because you are not going to many cases to the customer because SOR report is small, less, false positive is low. So when you are setting the rules, although it is complying some of the regulation, but you are not putting a very harsh one. And what happens, and because of these this relaxation, banks' risk increases and managing risk decreasing. So third thing is obviously if you relax the rule and the less alerts is being generated, bank cost goes down. Third is that if you go on a moderate level and saying that it's not 100% transaction monitoring, rules are a little bit of flexible in the way that each country, how the behavior of the customer and regulation and the corporates are there, you can set this on a certain level. So if you are setting the transaction monitoring rules on a certain level, definitely the customer experience will slightly go down because it's not very low, but your cost to the bank will go significantly high because it is directly proportionate to transaction monitoring report, SAR report, how big the system is generating the SAR report. And obviously it is related to the cost to the bank, that how they are going and addressing those issues. Now coming to the right topic today, that what is the topic we are having, which is called use of AI in AML. Now, this solution which I told you the banks are having technologically to generate the alerts on the basis of rule setting in a system, it is all technological system which has been developed. Some banks has developed by themselves, some took from the market, and some are basically both. Like they took the solution from the bank, from the vendor, they modified a lot around it, and then in a combination of two, they are coming up. Now, one of the thing is that it has been seen, and I will come back to those banks which has already started the use of the AI, that increase risk detection. So one of the area where banks feels that the lot of alerts which never came before because of the rules, but as the data captured by system and AI can go to around all, and those data which is even not covered, they can take it and comes with the some of the alerts as well. So the data is always marked, means it is tagged. And untagged data is always a problem. Now, machine learning does this, that they go to those which are look like fraud, look like transaction fraud, look like that in these 12 areas which I spoke about, it is an issue. It is exactly the same. AI is being used for cybersecurity. Now, cybersecurity, we have the list of all the malwares. So there is a signature generated out of it. Software knows that these are the malwares. So when these malwares are coming to your system, actually you know and you can stop. You can detect and you can stop. But if it is a totally a new malware, never been experienced before, and coming into the system, this AI for cybersecurity looks into the untagged data, or which is basically look like a malware. So what's this AI feels that it is not a malware, but it is look like. So it sends it to the area where they do further analysis of this information, and then either they pass it to go in or they reject it. So there is a lot of AI is being used to identify the area on the basis of large data that it is a risk or not a risk. Lower operation cost. So definitely if we are very accurate, means that AI go and really work very overall the data, and the person should not go in really dig out the data and see the alert is a false positive or false negative. But this AI helps basically to look into the various application. It can go to the across the application. Like if it is a fraud is happen on a trade side, it can see the trade, it can see the treasury system, it can see the your transaction system. So it basically together all systems has been seen, which usually this when the alerts start, the manual the people do that. So when we use the AI, operational cost goes down. Improve governance. Obviously, a bank will be having more governance on the area which might they cannot know before. So that is definitely one of the area the bank is enhancing their risk monitoring capability. Continuous learning. Obviously, then machine learning is coming and detecting first time one pattern, and this pattern knows, the bank knows that this pattern is coming up from a one customer, or there is a scam over there. So they can, their learning goes high, same as machine learning tells to the AI that now this mechanism has to be looked into. And obviously improve customer experience, because if the AI can look into the overall holistically, the all data going to the customer is very less. Like it will be very targeted question to the customer, not a untargeted or questions which customer don't like. So that's the main benefit of the AI to use in anti-money laundering. Now, coming to another area which is called challenges to implement AI for AML monitoring. Obviously, every technology when you use this happens. Like when I remember, because I'm working with the bank since last 28 years, and when we automated first time anti-money laundering and technology from manual, this data quality issue we surfaced up very heavily at that time, because all data was a manual, and the manual data cannot be seen quite often. So when we did the this automation against the anti-money laundering, data quality is one of the subject which took years and years to the bank to clean up the data or understand the data. So second is explainability. Like data is there, how you can explain the data. So the transactions are complex, means there are some explainability which bank can drive through the AI, but some cannot be. But that is the truth. So explainability is important when artificial intelligence is being used, especially machine learning. So machine learning goes into there are two sets of machine learning, like supported and unsupported. Usually AI rule book is all supported basis, means all the data are tagged. Non-supported is all about the machine itself learns. Is a machine is learning. So if machine is learning, then machine is coming up with their own tagging over data as well. So there is a number of new cases start coming when you are using an AI, which you have not discovered before. Now, regulatory compliance. This is one of the subject when you use the machine learning. Regulatory compliance is hard. You cannot change it. You cannot do anything. You have to follow it. So this is a rule based. This is not some machine can slightly modify and think that it can be like this. So there is a challenge how the regulatory compliance has to be fixed by 100% when you are using the AI in AML monitoring. Human expertise. So when we did from a manual to automated way and set the rules into the technology, there is a need for human to learn more. Now, when we move from this current system where the lot of automation is already being done, means I said hundreds of the rules are already there. So knowledge is there. The people who are working should have the knowledge of those rules. As I said, the regulatory rules cannot be changed. Regulatory rules remain to be there. But the new rules are coming. The new AI is introducing the complex situation. So need to train the people is very high. And when we are implementing, or when banks are implementing AI into the AML or any other area, like this is very, very important. Wherever you can be able to introduce the machine learning, the unsupported changes, which is machine learning is coming, and untagged data to be tagged, human expertise required. And the fifth one is a bias. So obviously this is the hottest subject in an AI, bias. Now coming into the bias, I want to show one area where 12 global banks actually gone and prepared the frameworks for the guidance for the management of financial crime risk. And these are the top 12 banks. And this is called Wolfsburg Group has been created. You can go and do the Google in the sense that if you want to have a more information about it. This has been created in 2022, though it's not long ago. And they have set up some rules for AI as well. So this bias which we were talking about, there is some discipline somewhere the AI should be having it. And that is the subject of a discussion today when you are going very heavily into the use of AI in any organization. So it's not only the banking, it can be on any other bank institution as well. So, but bank is very trustworthy bank. There is a highly regulated organizations, and there is a customers are really putting their money into it, which is their hard earn money, and customers should have a trust on the bank. Now, what this Wolfberg came into the 5 principles for responsible AI and machine learning. Now, this is something the subject when we are saying bias, that responsible AI and ML. So wherever ChatGPT is coming, or Lambda is coming, and all other tools are, or Google itself is coming. I'll discuss later on. The Google also developed the kind of application on a cloud which helps to run to do the AML monitoring, and especially the customer risk. So that we will discuss later on. But responsible AI and money laundering is very, very important. And these are the 5 principles. And today I'm not covering these principles. Just I want to create an awareness about it, that there are principles and there are rules where bank, when going and trying to implement it, what they're supposed to look into it. Okay, so we discussed a little bit in a sense that how AI is being used, from where it picked up, how the rule-based systems, not replacing AI. Understand the rule-based system and the AI work together hands to hand to help on anti-money laundering and enhance the risk capability of the bank to monitor these frauds. Now, these are the 4 banks I looked into, and especially I can tell you why I chosen this. Standard Chartered Bank, which is my bank. I worked for 28 years. Of course, I know a lot of things about it. HSBC, another, I will give you the example why I've chosen. JP Morgan Chase is another one, and Ing is another one. So these are the 4 today. We will see what they are doing. I cannot go to the number of banks are coming up with the solutions. So I'm not going into it, that how they are using API, artificial intelligence to monitor the transaction, to monitor the customer, and creating the risk profile of the customer. Now, all these 4 are using one solution which is called Contexa, is a software which is being used for AI for these 4 banks. These 4 banks are not only using the Contexa, they are using the Contexa, they are using their own current money laundering solution, which is rule-based. They are also using the Google solution. So Google came up with the query system. Google came up with the complete APIs which banks can be able to use and do the customers risk profiling. Like a Standard Chartered Bank is now having a complete 360 view of a customer risk. HSBC has taken a more of a path along with this Contexa. They took a project with the Google, and this is a very famous project where Google came up and helped along with HSBC to develop this package. So this package is all about where any bank, these are kind of solution which is on a cloud of Google. And the famous query system of a Google basically attached to it, where you can do the data analysis. We go to this context as they are doing for number of banks, more than around 12-15 banks. They are helping them to do the data analysis, and the main addition of this company is untagged data. Now, with this 12 banks, which is basically working with Contexa, the company came up when they have supported these banks, certain benchmarks, like what they have added value to it. And that is very amazing. I was not aware about these numbers, and I have seen in this Contexa website. By the way, I have no link to the Contexa. I chosen because this is one of the application is being used by these 4 or 5 banks, which I have chosen to give a use case to you. 75% reduction in a false positive, which is very high, means that you are reducing a significant work of manual work. So if you are using this application and implemented in your bank, 75% reduction in a false positive means that alert was false. Actually, the alert who has been generated was negative. So it doesn't generate alerts, so nobody has to look into it. So the SAR report has goes down significantly. Now, second is 99% match accuracy rate. That because of the AI, and that is because of the data quality, that how you can be able to match accurately the rate. Like I can give you the example. I don't want to go into the various rules and various sections of the anti-money laundering, but I'm giving here one example that if in any country the transaction limit is a $10,000, and if it is beyond $10,000, this anti-money laundering system has to review it. And of course, if this is a $10,000 and regulator put the regulation that bank has to inform all such transaction above X threshold. That threshold can be 100,000. That threshold can be 500,000 or 10,000. Now, how people do? They know that this is the case. Like the people who are doing these kind of suspicious activities, they know it is 10,000. So what they do is they go for a transaction like 9,900, 9,999, 9,500, 9,800. So they change it to 10,000 to slightly lower down. Now, as the rules is going into it and set on a 10,000, it cannot surface up this issue. But when you go to the use of the anti-money laundering, it goes into the behavior. It looks into the behavior of the various transactions and go into it and really review it, whether this is the case which can be subject to the discussion or not. So the match accuracy rate is pretty high when you are using AI. Then they're saying 80% reduction in the investigation time. Obviously, if your SAR report is less, number of alerts is low, your investigation time is low as well. Then they say that 75% of the field automatically populated. I already said that during the KYC and CDD, a lot of fields has been updated or automatically or populated automatically to the system, even though when this system is having certain data outside your data, when it is looking into it, can mix together and be able to populate for the anti-money laundering decisioning. Now, 68% improvement in naming. Obviously, I mean, AI can do very well on a naming screening. So naming screening means that there is a database which is a sanction database, trade database, countries which are sanctioned on a multiple areas only. So it is not, it is a country, but it is basically area where the LC cannot be opened in a particular product or particular thing. Same as there's a countries which is a high risk countries when you are doing a screening, when you are doing as a PAP screening, blacklisted screening. So when you are doing a naming screening, one is basically that you have your own screening method, which is pretty okay. My view is that it is reasonably working well in a bank, but the changes into this is a regular basis. So a PEP report is changing almost every month or quarterly or annually, definitely. And same as it is changing on a sanctions as well, because the sanctions are coming every quarter here and there. So 68% improvement they found into the naming screening. Now, as I said before, that Google developed a AML AI solution where they came up with a lot of APIs, and you can use that API to understand the transaction pattern of the customer. So when you are using this AI for your system or the data, it can give you the customer risk profiling for transaction pattern, which is a big thing. And as this is available on a cloud, I'm not sure there is any charges on it using it. But if you really want to go and search for the Google Cloud AML AI, you can see the HSBC project over there, where they have gone and tried to use all these APIs, and they have this data which I showed you how much the improvement came in. Might be some part of it came from a HSBC project as well. And also it basically identify high risk commercial and retail customers. So bank is really always looking into the risk profiling of the commercial and retail customer, which is CDD. So CDD is not a one-time exercise when the customer is coming. So if a commercial customer is coming, we need all the documents, we need the registration of a company, we need the information about the directors, we need the so a lot of information required when a commercial company is coming to open an account and a first time. So that CDD is thorough and takes a little bit of a time. I mean, it used to be a month, now it is probably 3 days, and maybe it can be reduced further. But retail customer is slightly fast, because since the digital banking is coming up, since the digital KYC has been started, the retail customer KYC is happening very fast. But what I'm saying is that when you are looking into that one customer, which was a normal commercial customer or the retail, gone into the high risk customer, you have to do the CDD and KYC again. And that is very important, because there's a huge cost to the bank if you are doing so much of this customer's due diligence. So it's a chicken and egg situation in a way, that if you are not doing it, you are putting the bank in a risk. And if you are doing it, you entered in the issue of the cost. So when somebody is calling to the customer and asking so many documents again, obviously customer has to produce, manual work has to be done, review has to be done. Now it can be automated to certain level, but not to the 100%. So identifying high risk commercial and retail customers through this Google Cloud AML AI solution, this is extremely good and excellent implementation, which people or bank can go into it, which they have not invested a lot, and they have developed some local solution or their own solution into the bank, and now they want to use the API. So that is the best option for them, that they have some solution, whatever the level of it is pretty good automation, is a halfway, it is using a lot of RPA type of implementation, whichever the scale is the bank is having. But when you are introducing the AI, you can be able to take it to the next level. And of course, one side is the cost is important for a small bank, especially the digital bank. And if this cloud AML, Google Cloud AML, and this query system, which is data analytics, now it is loud. And recently, I was hearing, I think yesterday, the big announcement came in about this analytics query system as well, which is now available to the customer, and customer can be able to go in a text 10x speed to be used for these data analytics. So these tools are available now. Whether it is a digital bank or the virtual bank or the bank, if they are struggling on an issue of automation of anti-money laundering, or want to take it to the next level where you have to reduce your cost and you have to improve your risk monitoring, and you want to do the risk profiling better of the customer, that is the area of the Google Cloud AML AI can be used. So I stop here in a sense, because I told you about 12 areas, and I have selected 3. One I have already been done, which is robo-advice. So if you have not looked into, you can go down and see in my channel that I covered robo-advice. Now I'm covering the AI use in AML, and I will use a few more videos on an AI use in banking sector. So if you like this video, please subscribe it and put the bell icon, so that if I'm doing any new video, this can be coming to you as an alert. Thank you very much.